2024 has been an amazing year for artificial intelligence, where it's estimated that 72% of employees are using AI in some capacity. And whether you realize it or not, it impacts all of us, from how Amazon recommends us product, using navigation apps with real-time traffic updates, and sadly, we also see it in our customer service. And seeing how AI is in the early stages, it should be no surprise that AI companies are expected to grow an average of 36% a year for the next 5 years. So if you had invested $100,000 in AI companies today with a 36% CAGR, or compounding annual growth rate, it would be worth over $465,000 in 5 years. I've been saying it for a while now, but this is a once-in-a-generation opportunity for investors. And I hope that you listened to me 2 years ago when I tried my best to share this out. Regardless of where you're at in investing, I'm going to break down the top AI companies to invest in for 2025. And of course, I'll be following this up in a few weeks with the best AI ETF for those of you that don't like investing into individual stock. Now, as I often say, I'm not here to withhold information. That's why I'm going to list out each of the companies that I plan to cover in the video right now. And then I'll give you my commentary on why they're on the list in the first place. And one of them is on the list because I expect a major pullback, which will give most of you a chance to get in. I'm also going to provide my bonus list of AI-specific IPOs that you'll want to keep an eye out over the next year. So, the top AI stocks that I'm discussing today are ASML, Palantir, Nvidia, Amazon, CrowdStrike, and Taiwan Semiconductor. And as I had said, I expect to pull back from one of these. Now, if that's all you wanted for the video, then I get it. You won't hurt my feelings if you ditch the video right now, and I understand if you don't want to give me a like or a subscribe, but I hope that you hang around to find out why they're on my list, and definitely to learn about those upcoming IPOs, which are initial public offerings, or when a company first lists its stock on the public market. The first company that I'll speak to is Amazon, which many of you know, they were my prior employer and they were a delight to work for, said nobody ever. Where most everyone knows them as an online retailer, but the majority of their operating profit, roughly 74%, comes from their web services group, which hosts other large companies' websites and operations like Netflix, Airbnb, and Disney+. And I think we all know about Amazon's glorified push to have drones delivering product. This is an area I wouldn't get too excited over, simply because they've talked about it for over 11 years. But a hidden area you don't often hear about is their Project Kuiper, which intends to have over 3,000 satellites to provide internet and communications worldwide. But how does this differ from Starlink? Kuiper satellites will have optical inter-satellite links for extremely high-speed data transmissions between each of the satellites. This will give Amazon the ability to marry this up to their web services group to service full-on enterprise networks and not just individuals. Look at these satellites as a method for Amazon to stretch its already growing AWS business even further. And let's not underestimate the AI services offered from AWS to all of its other corporate customers, which is only going to grow exponentially over the next 5 years. And if you weren't aware, AWS also has a partnership with Palantir to host its Foundry software for its customers. But I'll speak to that later on. When we look at its performance year to date, it's up 39%, but the P/E ratio is high at a 44.6, but it's not too crazy high, seeing as how the S&P 500 is at a 30. And now I want to look at the financials, where I'll change the earnings and revenue to quarterly because I want to show you the Q4 in 2021. The margin happened to be over 10%. Then Q4 of 2022, well, it happened to be flat. And Q4 of 23 was a negative 19%. Now, what do you think would happen if Amazon had a positive margin in Q4 of 2024? I'm just guessing that the stock would have an amazing rally. Can it happen? Well, yeah, I certainly think so. Next, I love the debt to assets, as it's literally falling off a cliff, which is exactly what I want to see from Amazon from all of their investments that they've made in itself over the past 3 years. And the cash flow in the lower left, well, it's showing really good operating income growth, and the earnings per share, well, it's consistently beaten expectations the past 5 quarters. These are exactly what I like to see from an established tech company. All the financials, well, they happen to be moving in the right direction, and it should be a great investment long term. But hey, once again, just my opinion. The next company is Palantir, which specializes in big data analytics and AI integration, enabling governments and enterprises to harness advanced tools like its artificial intelligence platform, also known as AIP, for real-time data-driven decision-making. And I often state that they offer the most advanced platform that I have ever seen, and companies are touting how they're getting an immediate return on their investment within a few months. And I hope that you were one of my early followers, where I often talked about Palantir as a great investment, and it's seen over a 300% return year to date. But let's get real for a second when we look at the PE ratio of a 339 and recognize that it's running just a little bit hot at the moment. But let's flip over and look at the financials, where the earnings and the revenue have blown up in the past year, where it realized a positive margin for the first time in 2023. And next to that, we have the debt to assets, where it's taken a steep fall, which is perfect. And the operating cash flow in the lower left is decent, and the investments have fallen, but that's not really a huge deal. And I love how they've been beating the forecast for the past 5 quarters in the lower right. But like I said earlier, let's get real for a second. The PE ratio is wildly high, and Palantir is getting some great press from being added to the S&P 500 and moving from the New York Stock Exchange to the NASDAQ. And there's a lot of institutional money that's flowing into the stock. But what happens if they miss their next quarterly earnings, or only come close without a beat? My gut? Well, it's telling me that Palantir is set to have a little bit of a pullback in early 2025, and that's a good thing. It's good because the stock price needs to come back to reality and to give all of you newer investors a chance to buy into the company. Now, I am not saying that a pullback will 100% happen, but I am saying that there's a very strong chance that it will. And when it does, we should all pounce on the opportunity, because this stock is literally going to the moon over the next 10 years. Now, I want to cover a company that wasn't on my list, but they were a contender, seeing as how they're already up over 400% year to date. And that would be POET Technologies, which is also the sponsor of today's video. POET Technologies, a publicly traded company on the NASDAQ, is revolutionizing data center and AI networking by addressing data transfer bottlenecks, latency, and heat with its patented optical interposer platform. Traditional electronics rely on copper wiring, which consumes significant power, and it limits data transfer speeds. POET replaces these wires with efficient lasers, drastically reducing power consumption, increasing data speeds, and minimizing components on their microchips. This shift happens to lower labor costs and the bill of materials. Their innovation has secured partnerships with industry leaders like Mitsubishi Electric, Luxshare, and Foxconn, whose clients include Nvidia, Apple, and Amazon. POET's technology is fully compatible with existing infrastructure, while adaptable to future advancements, making it an easy and practical add-on. As the AI sector expands, POET directly tackles heat and bandwidth limitations, challenges every AI company is striving to overcome, positioning their technology as a crucial solution. You can learn more about POET Technologies via my link down in the description. Our next company is Taiwan Semiconductor Manufacturing, which is the world's largest dedicated semiconductor foundry, producing integrated circuits for major technology firms like Apple, Nvidia, and AMD, where semiconductors are estimated to grow at 8.5% a year for the next 8 years. And Taiwan Semiconductor has over 61% share today, and that isn't expected to fall anytime soon. And I believe that most of you know that semiconductors are the backbone for all of artificial intelligence, and it's the driving force of that revolution today. When looking at TSM's performance, it's doing great at up 90% year to date, and their P/E ratio, well, it's actually a little bit low for its sector at a 29.6, so that might equal upside for all of us investors. And when we look at the margin and revenue, it had some dips in late 2023, but it's quickly turned around and looking good. You'll notice their assets are climbing, but so is their liabilities. It's a business relying on heavy capital expenditure, and this is more added risk than any of the other companies. However, it is great to see consistent beats for their earnings per share. I'll also point out that analysts have over an 18% upside for Taiwan Semiconductor for the next 12 months. Overall, almost every company making money from AI has to rely on Taiwan Semiconductor for their hardware, so it stands to reason that it's a great choice because all ships rise with the tide. Our next company is ASML, which is a Dutch multinational corporation specializing in the development and manufacturing of photolithography machines essential for semiconductor fabrication, including being the sole supplier of extreme ultraviolet lithography systems required for producing advanced microchips. They literally have over an 80% market share in the equipment used by all manufacturers of microchips. So just to give you a little bit of scope of their importance. And in looking at their performance year to date, it's poor at a negative 4.5%, and their P/E ratio is pretty good at a 36. And in looking at the earnings and the revenue, They're climbing. Granted, the revenue took a hit in 2022 and 2023 due to the restrictions of selling to China, but now they're on a good trajectory. Debt to assets have climbed with CapEx, and liabilities taking a recent dip, which is good. From here, I'll point out that they've consistently been beating earnings per share forecasts. And analysts project the next 12 months to be great for ASML with over 25% upside. Of all the stocks that I speak to today, this is the one no-brainer of the group. That's really all I'm going to say about it. The next company is Nvidia, where most everyone knows how great they've been for AI, seeing as how they are up 182% year to date. But interestingly enough, in the past month, the stock has dropped. And a key reason for that slowdown is because they had major delays in launching their next generation Blackwell GPUs of the B100 and B200 due to design flaws. And the intense demand for customers is straining on their supply chain. All of these delays has already slowed the stock growth, and it's expected to improve in December of 2024 and especially the first part of 2025. This will reflect positively in their next quarterly earnings in February 2025, and that's why analysts are giving Nvidia a 12-month forecast over 25% for the next year. I won't dive too deeply into Nvidia. Look, they dominate the market with superior products, they recently faced some setbacks, and they created an opportunity for investors like us to buy in ahead of strong potential growth in 2025. I'm just giving you a little background so you can see that there's a little bit more room to buy and grow. Before I list the next company, don't forget that I'll have a quick recap of the top IPOs that may be coming in 2025, which I think you'll want to be ahead of. The next company is CrowdStrike, which is a cybersecurity company that provides cloud-native endpoint protection and threat intelligence through its AI-powered Falcon platform to prevent and respond to cyber attacks globally. But unfortunately, many of you may be familiar with the company because they were a leading cause for so many computer systems going down in the summer of 2024, which caused the stock price to plummet. However, they managed to maintain their business and took a hit to margin, which you can see in Q3 of 2024, where it dropped to a negative 1.7%. Because I'm guessing they had to incentivize some of their customers to stay with them. But on a positive note, they have very good debt to assets, which are dropping, and the cash flow is steadily increasing. And like all other companies I've spoken to, they are consistently beating forecasts for earnings per share in the lower right. This is another company where I'm dollar cost averaging today to steadily invest with CrowdStrike. But I am waiting to see if they get any lawsuits from the outages or additional margin hits, which would show in their next earnings. And if they have any major hits against them, then you'll see a heavy pullback, and that would give us all another good chance to buy in more heavily. Now, that's the scenario that I see potentially playing out for CrowdStrike. Now, I hope you can appreciate that in my commentary that I'm not just saying buy today, buy right now, buy, you're missing out. But instead, I'm trying to be level-headed and explain what I expect to see in the next few months and how I'm going to adjust my investments to take advantage of the situation. Now, let's touch on some of those potential IPOs that may be coming in 2025, where the first one will be Cerebras, which specializes in designing and building powerful AI computers, notably developing the wafer scale engine, the largest computer chip globally, to accelerate complex AI model training and inference. This is one IPO that has me very excited if the valuation isn't ridiculous, because I expect this will become a very hot stock once it's on the market. And it may be happening as soon as next month. The next potential IPO is Anduril Industries, which is founded from a guy named Palmer Luckey that created the Oculus VR, where he's turning the defense industry upside down, where he's creating high-tech weaponry and defenses, where they focus on rapid innovation and attempting to provide solutions to problems the government doesn't even realize they need, where their products are easy on production and maintenance, and they offer software to support AI efficiencies. When this company goes public, they will quickly become a leader within their industry. Now, there are some people that don't support defense companies from a moral standpoint, and that is perfectly fine. But after serving 12 years in the military, I fully support a company that makes our troops better equipped for every situation and to have an advantage over our adversaries. And the last potential IPO would be from OpenAI, where their ChatGPT made AI more mainstream, and really, it started it all. Granted, Elon Musk wants to block their ability to become public and for profit, but really, I don't think he'll be able to keep it from happening. OpenAI is already ingrained with so many companies and users that I believe their potential for growth is extremely high. As I mentioned in the beginning, if individual stocks aren't your thing, mind, then I'll be following this up with the best AI ETF within a couple of weeks. Thank you so much for watching.